The decision to keep the repo rate at 7.5% has dismayed many who were hoping for a reprieve from the economic squeeze. Annaline from Debt Rescue joins us this afternoon to discuss the repercussions for consumers who were barely keeping their heads above water. Very good afternoon to you, Annaline, and thank you as always for joining us. I mean, a little 25 basis points cut would have made a huge difference for those of us with bonds, car repayments, and now it seems as though the Reserve Bank is set to hold indefinitely on the interest rates. I mean, how does that affect consumers who are already struggling with debt?
Good afternoon. Indeed, not well. It's placing us in a very difficult situation because not only are we sitting with the unchanged interest rates, we've obviously recently had our budget speech with the tabled VAT increase. We've got electricity prices going up by 12.7% now in April. It's a lot, and it's very difficult. By no means is this a simple situation for consumers. If you have any form of debt, your debt repayments remain very, very high. We have very high interest rates. And unfortunately, yes, we've seen the CPI figures. We know that inflation is stabilizing here at about 3.2%, but it still means the cost of goods are going up. Nothing is coming down, unfortunately, and it places consumers in a very difficult situation at the moment.
It really does. And I mean, how can they then expect what can they expect rather in terms of increased debt repayment costs and also the higher interest rates on loans and the credit cards, which I assume continue to squeeze them?
Oh, definitely. The unfortunate reality is that from a lot of the economists, at the beginning or a week or so ago, there was a slight hope that we might see a reduction of 0.25%. But obviously, there's a lot of macroeconomic factors that are being monitored. We're specifically looking at what's happening, for example, in America. There's speak of possible recession there.